Good afternoon, welcome back. I'm Bridget Taylor and this is Currency Wars. Today I'm joined by John Cairns, he's from R&B. But first we're going to have a quick look at what's happening on the wires. Globally, 2016 has really started off in a volatile fashion as commodities continue to plunge and stock markets face some of their biggest sell-offs seen in recent years. Meanwhile, China remains under pressure as the PBOC attempts to contain the sell-off in the Chinese assets, and they're burning through significant reserves in the process. Meanwhile, emerging markets with domestic imbalances and an exposure to commodities and the Chinese consumption have been the hardest hit. We see that in the rand as the pain is evident as poor decisions by governments have driven offshore investors to greener pastures, and this has cost the rand R2 in the process. This exacerbates the already wider current account deficit and the domestic issues which plague the revenue generation and potentially place us under pressure of seeing stagflation in 2016. This seems evident as import costs expected to rise and drought conditions are going to slow domestic growth. Meanwhile, it's not a rosy picture for anyone's standards, and that confirms that the rand, now at much weaker levels, remains firmly on a weaker trajectory. Some of the key risks that we'll be watching this year are the US Fed rate hike, the ratings agencies' outlooks, as well as the Chinese economic growth projections. But I'm going to turn over to John and we're going to dig a little bit deeper into where the markets are expected to go in the week ahead. Welcome, John. It's been interesting.
Yes,
Happy New Year to you too.
New Year.
Geez, it's been an interesting one. So I think, I want to let's have a look, because you were saying to me offset that you'd put out a report talking about the differences between the global pressures that we're facing, as well as the fact that we've got domestic issues, because I think that those are something that our viewers need to watch in terms of separating the bad news from the bad news. So there's certain things we can control and there's certain things we can't control. So maybe just give us a high-level indication in terms of the global issues. I mean, I mentioned a few of them now, but just let's talk through them, just as a high level, why are they so important?
So as a start, what we did in this report that we published yesterday is we went back, when did the rand start weakening? July 2011, and then we tried to determine what drove the weakness in the subsequent 4.5 years.
But relative weakness, John? So we've seen that trajectory relatively well contained, but that sudden sharp sell-off has been quite dramatic. Exactly.
So what we did is we looked at three different factors. So we know the dollar's been strengthening, and so all currencies have weakened. So you can take that out of the weakness. If you said there's issues we can control, there's issues we can't. Obviously, the dollar strength, nothing we can do about the dollar strength. So that's contributed about 30% of the rand weakness that we've seen. And what we've also seen is other commodity currencies coming under pressure. So we can look at that, and we know those movements are driven by the commodity prices, risk appetite, etc. Okay, and then
is that, just to stop you, is the commodity right though as an indication of global inflation remaining benign, or is it just as a lack of demand?
Probably a lack of demand and all the excess supply that's coming online, the huge investments that put in place before the crisis finally coming online. So Aussie, Canada, Brazil, all the commodity currencies are coming under pressure. So it's not surprising that the rand must come under pressure as another commodity currency. So maybe that's contributed another 30% to the rand weakness.
But now, just to stop you, so how much weakness have we seen? If we look at rand in 2011 and 2015, what is the total weakness? I looked at it the other day and thought it was close to about, almost, prior to 2008, maybe around 200%.
So, a nice way to think about it would be around 10 rand. So from the low on dollar rand was almost exactly 6 rand 60.
So we're up to 6 rand that we've equated. We've got another 4 rand to go.
Exactly. So we were at 6 rand 60. Now we're almost exactly 16.60. So it's exactly 10 rand, just to make it easy. And you're right, that's 6 rand that we can explain. 3 by the dollar, 3 by commodities, and then almost by definition, we've assumed that the remainder must be local specific factors. Can't be explained by no other commodity currency is moving, so we can ascribe that to local factors. And I think you made the point that that was pretty small coming into December, and now that factor has really grown with the political concerns, the rating concerns, etc. So it's the local factor that's contributing. What I find quite interesting, Bridget, in thinking about this way, is it makes us, when we think about the future, we can think maybe we need to think about all three factors: the dollar, commodity prices, and local issues. And maybe we tend to be a little bit too focused on the local issues.
Well, I think that sometimes, if you listen to the news wires, a lot of blame has been put on the global economy. So you're saying 60% of it, in terms of the move that we've seen, has been as a function of the fact that we happen to operate in a global environment where we're seeing the US grow. So let's look at what is the US doing right that's seeing some form of growth that we're not doing in South Africa. Because if we look at the rand that was trading at R6.50 years ago, we were seeing interest rate at all-time low. We didn't take advantage of those levels, especially because we had such huge infrastructure spend that needed to be taken care of. We're now sitting in a situation where maintenance hasn't been done. We've still got to spend this money. We've got protests out of the universities. That means knock-on effects in terms of revenue, in terms of having to spend money or spend money that wasn't necessarily budgeted for. So these types of issues continue to plague an already slow growth environment where revenue is already under pressure. So going forward, how do we remedy that? Because we have got a 4 cents potential saving that we can make if we get it right.
Yeah, 4 rand, not 4 cents.
Sorry, 4 rand. Sorry, my humble apologies.
Well, I guess ultimately, after every global financial crisis, it's typically the US that bounces back first, and that's because of the flexibility of the economy. It's a very capitalist society. And the negative sides of that is it can clear imbalances very quickly, so people lose their jobs and so on. But the positive side is it can reinvent itself and come back quite strongly. What we have in South Africa is unfortunately a combination of maybe fundamental issues that are working against us and cyclical issues, right? So cyclical, this commodity downturn, etc. Go back to your comment. There's certainly issues that we can't deal with. It's not really our fault, but there are other things that are in our control.
Okay, so if we look at the South African economy as an economy specifically globally that relies on investor inflows, and we've seen good investor inflows. We were listed on the WGBI, the World Global Bond Index. Awesome funds moved in. People could invest in South Africa. It's a nice, robust market. It's got liquidity. There's that carry trade opportunity. The deterioration of the rand, however, is a massive factor, as well as the fact that we've had a couple of incidents that have happened that have really cost us. So if we look at the issue that happened, and it's been downplayed in my mind, around the comments that were made and then the removal of Finance Minister Nene, that cost the rand 2 rand at that point. We've never really recovered back from that. After that, we've seen that push up to 18, back to 16, but we've never come back from 16 to 14.50, which was what we were trading prior to that. So that was a decision that has in fact cost the rand 2 rand. Yes. So coming back from that, do we, we're going to have to deal with contagion effects as we go through the remainder of the year. But how do we prevent those types of things that cost us where we really don't need that kind of cost?
So the first thing is February the 24th, we need a very conservative budget, keeping to the targets, particularly keeping to the expenditure framework. It can gain some credibility back.
And the SARB? Talk to me about what you think what the SARB's going to do.
So the SARB is going to have to hike rates. So we at RMB think that they'll do 25. It's in 2 weeks' time now.
Sure. You're conservative, hey?
Yeah, they may even do 50. I think the bias is still for 25.
And there's no emergency decision on the horizon?
Not if the rand remains at these levels. If the rand blows out further, then they may have to act. But at present, there's no reason for them to act. But the SARB, there's a lot of issues for the SARB to think about. Remember the first flash crash, the 24th of August, when the rand spiked up in Asian trade. After that, the SARB put out a statement threatening intervention to stabilize the market. This time around, we haven't heard anything. On the desks now, the bid-offer spreads have widened. It's not something that the authorities want to see. It means the corporates out there, the institutions phoning us and trading, they're not getting the best price, not because we as RMB can't offer the best price, but because the market's thin, we're worried about further jumps, etc. So not only has the rand not come back, but there's been some damage to the microstructure even of the market as well.
And also with the trajectory of the rand at these levels, we're obviously looking at everybody having the same sort of trade on, right? So we're going to look at the views for the week ahead. So just park it there for me for 2 seconds. We're going to put our strategy ahead for the next week. I'm going to put John on the block. So stick with us for the next few seconds. John, they're not going to do my flash, so you are now on the block, my friend. Talk to me about quickly where you think, we are looking at this upward trajectory. How much volatility are we expecting? And what do you think in terms of obviously the cross currencies as well?
Okay, so on dollar rand, as you've spoken about, we had this blowout and we really struggled to establish new ranges, new levels. So it's a bit unclear. I think we should expect wide ranges, even though there's not a lot of event risk coming up in the next week. But maybe 1635, which was the low yesterday, up to the 17. I think those are it's quite a broad range, but I think that's probably realistic for the next week. Euro Rand, Sterling Rand, I think there's less pressures there. 18 and 24 may be capping on the top sides.
Fantastic. Thank you so much. So just in conclusion, the trading strategy for the week ahead, be careful. Volatility reigns supreme. Unfortunately, markets are extremely uncertain right now. We're looking for weaker levels on the Rand. However, looking for those ranges of around 16.35 up to about 17. It is wide, but that just speaks to the volatility in the market. Looking for further weakness as well on the crosses. So if you're an exporter, you must be smiling. There's not a lot of those left, but the importers, guys, cover yourselves. It is an extremely volatile market. However, if you'd like to send any more questions or comments, you are more than welcome to do so at Currency Wars 410 or to myself at Cowan Capital for your personal responses to the FX markets. Until next week, good luck in the trenches.